Patrick Karim from badcharts.com and a contributor to the Silver Chartist joins us today to go over where silver and the economy look to be heading from a technical view. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Patrick Karim, welcome to Metal Money. How are you doing?
I'm doing fine. Thanks for having me, Patrick. Really appreciate it.
Glad you could come on. Appreciate the time you've given us. Patrick, in past interviews, you were looking at a $31 silver price point for Q1. Does that still hold, and why?
Well, when back in Q4 or Q3 of last year, I saw that there was a direct correlation with real yields, especially the 30-year real yields. So those are the nominal real yields minus inflation rate with the price of silver. So when silver exploded, the real yields made a move down, the measured move, and then it went sideways. And I was getting always signals on the smaller timeframes on the daily chart that the real yields will break down again. And then I try to extrapolate, okay, if it moves down this measured move, then silver should reach $30, but they never broke down. So the market has a tendency to take longer to materialize than my imagination. So as that scaled, as the real yields consolidated sideways, well, silver did the same thing, gold did the same thing. So that kind of moved my targets in time. They're still valid because the price action did not break to the downside, but it did move it over. So those $31 and above, as soon as those real yields, and they're starting to turn down, as soon as they start really breaking down, then silver should move up in Q2. Even at the end, during Q1, we're going to see some truth, and Q2, hopefully those real yields could break down and drive silver and gold upwards.
Taking a step further, though, do you think the inability for silver to hold, let's say, even a $27 price point has created some negative overall sentiment for silver? But having said that, have you observed at times how negative sentiments can also be an indicator of a trend reversal?
Yeah, it's especially like on my Twitter feed, everybody following me, like I have those First Majestic coins in my logo. So my followers are mainly silver aficionados and gold, and I do get a lot of negative sentiment as soon as the price action goes down $1, $2, and you're wrong and all that. But you got to take a step back because most of my analysis, they're based on monthly closes. So every time you go back in the past and look at charts and gold, silver and gold exploded, everybody, oh, it's the best thing. And after that, it just halted, corrected 50% or 30%, moved sideways for months. And people, we're too close to our screens, Twitter, oh, what's the price action happening every day? So that creates bearish sentiment because you're expecting the price action to go up. And then, well, that's like a consolidation, a correction. That's right. Those weak hands, they give up, they go to another asset until all those sellers are out. And then after that, once everybody's out that doesn't want to hold for the long term, then the price action could go back up. So for the sentiment, yeah, exactly. So the sentiments has to go down rock bottom. And when on my feed, I see that everybody's is giving up on silver, and the price actions corresponds nicely to that we can't make new lows on the monthly chart for silver or gold. For me, that could be a good sign there that we could start going back up.
Okay. But speaking about price action, what price levels are you looking at that, let's say, if breached, will cause you to perhaps revise your analysis calling for lower price points? And likewise, what price levels are you looking at that, if reached, will further support your analysis?
Yeah. Well, there's a whole bunch of ways you could do like technical analysis, but the simplest way, when you're in an uptrend, you're above 1 year moving average. For me, that's like the baseline. And silver's 1 year moving average right now is about 2130. So if ever I have a monthly close below 2130 for me, for silver, I have to take pause. I have to say, okay, this might go sideways a little bit more. This could actually start tumbling down because you still have the momentum. If the incline of the moving average is still going up violently, you still have that momentum that could drive it back up. But it's a big warning sign if you can't have a monthly close above 2130 right now. So that's scalable. Every month, that moving average is going to go higher and higher. So that's for me, I don't want to close below that. And right now, we need a close above 28 on the monthly basis close. So if we close above 28, that means we're going to go above the monthly defined high that we had the back last summer. And that for me, that's the market telling you, okay, we're correction's over. We're going to drive up much higher after that there.
But Patrick, what is the most compelling chart pattern that has your attention right now for gold and silver?
Well, for silver, it's the multi year cup and handle that everybody's seeing. So that those highs from the 80s all the way to 2011, that's people consider that like one of the best looking cups ever. And the handle is what we did from about 2011, 13, all the way back to, we're starting to form it now. We're starting to turn back up. And that's just begging to get fulfilled. So that's why a lot of targets, 30, 40 to those all-time highs there. Gold already did that. It completed that handle part or its cup that it did from 2011 to 2020 when it completed. And at silver, for me, it's just natural that it's gonna catch up to that to gold, and it's gonna complete that. So that's a very powerful long-term pattern. And like I always say, the macro tidal waves behind this is more than the tweet of Trump or Biden or any type of news you could get. They're good maybe for the momentum on the short term, but there's something stronger on the back end that's really driving the price action of silver upwards.
Yeah, that silver cup is one very, very
Yeah.
large cup. You put out a few tweets recently. One of them being top morphing in progress on monthly chart for Nasdaq versus silver, the last bastion for U.S. equities. When this falls, they all realize this was just another Fed-sponsored bubble. Can you walk us through this chart, and what do you mean by the last bastion for U.S. equities? What are you seeing down the road?
Well, I did ratio charts for gold versus the Dow or silver versus the Dow. And those charts were already breaking down. So when you have a ratio chart, it's just telling you that if you have a choice between two assets, you're going to choose the one that's outperforming the other. The ratio could still go down, and both assets could be going down in price, just that one's going to go down not as fast as the other one. And on the gold and silver chart versus the Dow, we're already turning over, like on that right hand side, it's already starting to go down. But people were mentioning to me, oh, it's the Nasdaq. You're not comparing against the Nasdaq. It's a stronger U.S. equity index. So I said, okay, I'm going to do a chart, and that's why I said the last bastion. That means the U.S. equities are already topping or failing versus silver. So I'll look at Nasdaq, the strongest of the U.S. equity markets. And what I saw here on the monthly chart with using the true strength index at the bottom, it's already top. It's already showing big signs that it's topping, that it's starting to turn down. That means silver is starting to outperform Nasdaq. And as soon as this breaks down, the moving averages, you could see the thick black line is a 3-year moving average, and the small one is a 1 year. Close to those lower highs on the right. As soon as that gets really thin and starts crossing down, you could call that a death cross or a bearish cross. You have long-term momentum that finally the capital flows are exiting the Nasdaq and heading into silver, and that's just going to cascade down. And when you overlay cycles on top, like that 23-year cycle, and now we're heading close to that. So I did an angle of descent, that 34-degree on the right side, on the bottom right side for the true strength index. So if that momentum we keep going down at this speed, Nasdaq should be topping out versus silver maybe in 2022. And for me, that's where anybody looking at that chart should say, look, why would I put my money in U.S. equities when they could be better served in silver, preserve my value better in silver? That's why really, Patrick, we're really like at the beginning of all this commodity. Even if gold led the way, like in 2018 after the Powell pivot, and 2019 it broke out above that base at above 1350. Gold's the ringleader. It just paves the way for those monetary imbalances, and after that, silver follows, copper, all the other guys in the family of commodities, they just follow suit. And it's still pretty early until you see that chart before, until it hits the bottom, that ratio. There's a long way to go there in this bull cycle.
And in another tweet, you touched on $42 silver, and what you had said in that tweet was, this is how silver goes ballistic in 2021. Gold already laid out the technical framework. Now, 1 year later, it's silver's turn to lead the dance. Q2, $42, Q4, $62 target with overshoots. Hang on tight. Again, can you walk us through this chart and tell us why you see, especially with the what you see, especially with the 72 angle for gold and the 83 angle for silver?
All right. So those charts, that's why, like I said, gold leads silver. So you see those patterns; they're pretty similar. It's technical analysis. It's human behaviors, buyers, sellers, and then some give up, and some decide to load up when it's quiet. So those patterns are very similar. And when you see fractals like that, they have a tendency to repeat. So whatever gold did, I said, what happens if silver plays out in the same fashion? So those angles, you see those 72%. I wouldn't like. What you have to, the takeaway here is just that it's the same angle of ascent and not necessarily the number, because I could have stretched the chart and those angles, they would have changed, would have been 68 or 85, depending how I crunched the chart, but they're the same. Those are like a pull, flag pull type of measured moves. You go up, you consolidate a few months, and then after that, you explode for that same distance that you had previously. So for gold, I think it's prepping up for this year for one strong move, maybe in Q3, if this plays out, to another measured move, bringing it to $2,340. It's already laid the groundworks for what then I go to silver, and then I say, okay, silver, you're right below that 2780 level. So that huge top we had 2011-13, it broke down below 2780. And that called out a wall. So when you break down that support, now once you're below it, that one, it becomes resistance. So now we're consolidating right below it, just like gold did the same thing back in 2020. And once we explode that, I expect the same type of velocity. So all that power that we had, that 83% angle going up, I think that's going to be unleashed once there's no more sellers. Then we're going to just rip through and overshoot, just like gold did in Q2 to about $42. And after that, we're going to repeat, okay, we're overshot, it's oversold. The indicator is saying, okay, people think profits. Then we'll come back and test that $34, a little lower. And then after a few months, just like gold is going to show us the way, I expect another strong move in I think that's Q4, and for about that $67 there. But one step at a time. Let's see how gold explodes in Q3, and that could give us some vision, some crystal ball moments to see how silver is going to do later on.
We appreciate you taking that time to walk through some of the charts that you put out. Patrick, I hope we can do this again soon, and we wish you all the best for 2021.
Same to you. Thank you very much, sir.
There you go. Looks like we are going to see more and more investors coming into a very small silver market, creating a silver slingshot for the ages. As always, please let us know your thoughts in the comment section below, and remember to keep it liquid, keep it real. Thanks for watching, and I'll see you on the next episode of Metal Money.